What's up, ladies and gentlemen? This is Dovyfx back again with another video. In this video, I'm going to quickly go over a signal that I just sent out to my group. So I'm going to show you my analysis and thought process on the trade that we just take. So right away, if you see my previous video, you can check it out up there on the screen. Yesterday I posted a video where I was talking about is this start of retracement? Is this the point where the indices are gonna start going down? And I said no. I said it's probably not, because we still have a lot of 4-hour structure to be broken before thinking that this is the time that the price starts, pulling back from here. The price was somewhere around here, and a lot of people I saw on YouTube expecting the pullback, but it didn't happen as I expected, because we had a lot of still room to go down, before saying that it's time for a reversal. We had a lot of 4-hour structure that hasn't been broken, as example in this video. So to the end of the day yesterday, for me, for those who are United States, it was in the middle of the day. The price shot up, New York opened, the price started moving up, really nice momentum to the upside. So looking at the bigger time frame, we clearly have a bullish trend, and every time I identify the trend, I then tell myself, okay, if the trend is bullish and everything looks bullish and nice, then I'm only going to be looking to take long trades. So as you can see, we have higher highs, higher lows, higher highs, higher highs. We just created a higher high yesterday. So I'm gonna be looking for longs. So now if I go down to a lower time frame, we start seeing some zones that we can use to take a trade. So we have a big impulse. And for a big impulse, what I like to do is I like to pull out a fixed range volume and mark this impulse and kind of see where we have the most money, where we have the most volume sitting in this particular push to the upside. So as you can see, we have two bigger spikes comparing to everything else. At those spikes, I started looking for zones. And on the 15-minute time frame, we have one really obvious zone, and another zone right here. As you can see, spikes. So two zones. So I was like, okay, the price is either gonna come down to this zone and continue to the upside, or it's gonna come down, grab this money before continuing to the upside. So as I seen this big bearish candle, I was like, okay, since the momentum is really strong, it might be this zone that we're gonna be retesting. But if I go to even lower time frame, we can see that the price is respecting the zone, as at the moment it's closing above 200 moving averages, closing above 8 moving averages. So it's showing some momentum and showing some strength that, okay, maybe this is the zone that the price is going to be bouncing from. So basically, as soon as I saw three 15-minute bullish candles, I was like, okay, it's time to enter. Because as I always say, I don't like to guess what's gonna happen. I like to react to what's happening already. And instead of entering here, which is really stupid decision, would be a really stupid decision, because the price could just melt down, because the price did not tell me that it's gonna bounce at this moment. But I waited for the price to kind of move to the upside, to kind of show me the momentum before entering the trade. So that's what I did, and yeah, so far so good. And that's all my analysis. Nice and simple, zones, supply and demand, and that's all you need to be consistent and stay successful in this business. All right, so we're back as the first target got hit, and basically just waited for the price to go either way and show you the result. So basically what ended up happening, the price kind of had wicks up and down, and then just continued to the upside. My plan B, if this trade would have been stopped out, I would probably have taken a long trade off from this zone, but it wasn't necessary, because even though we had really strong bearish momentum candle, the price ended up rejecting it. So with that being said, that the zone is pretty strong and it's holding pretty well. And As you can see, the price ended up moving to the upside. So my second target is the start of this bearish push, so around 1.6, and the last target is all the way up here, so just around 2.3 risk reward trade. For now, I'm leaving all my position running because, you know, the momentum is pretty nice. The price is moving up without showing too much of a weakness. But if at any point the price starts to reverse, show weakness, long wicks, I'm gonna probably scale down, close some positions and hold it, you know, either to the break even or all the way to the final target. So as you can see, this is a live example of, you know, making trading simple. And, you know, I don't need a bunch of indicators. I don't need a bunch of, you know, confusing stuff that just messes up with my, you know, mentality and my psychology. I like to keep it simple. I like to keep it clean, and that's how it works. That's all I have for today. If you want to learn the trading way, the trading system that I do, I have a course. You can check that out in the description, or I have groups where I share my signals or trade ideas. That's all I have. Like that button, click that like button, click that subscribe button, and I'll see you next time.